If investors are interested in artificial intelligence, identify companies that are in a vertical space that is not being served. Companies have either a proprietary machine learning algorithm, a proprietary large language model, or they're going to have proprietary access to data that is going to be used to train the machine learning algorithm. We help clients understand a plausible range of value based on market metrics and understand what the key variables are so that we can determine a credible value thesis for that company. Valuing an AI startup is different from valuing other startups. The valuation metrics that we see, for example, OpenAI, which is the company that created ChatGPT, looks like they're raising capital at about a $5.6 billion pre-money valuation, which for a company that burst onto the scene only about 2 years ago is simply remarkable. What's going on in the AI space is AI has become something like what SaaS companies were 10 years ago. The potential for artificial intelligence in the market is undisputed. It's only a matter of how many trillions of dollars the market size is ultimately going to be globally. We don't know who's going to win. We don't know how many competitors can exist in the artificial intelligence market at once. We don't know how fast artificial intelligence is going to grow. We don't know what the regulation is like. We don't know what the legal status of data that is used to inform the machine learning mechanics that make artificial intelligence work. We don't know how that data is going to be protected through the courts and through the passage of laws. We don't know any of that. And so I think what we're seeing in the market right now is effectively a supply and demand dynamic, not unlike a commodity. Investors want to be in artificial intelligence. They don't want to be left out when the music stops. There's some risk to that. We all thought that blockchain was going to be dominating everything by now. It isn't. Blockchain simply has not delivered on its promise. But back a few years ago, many startups were achieving multi-billion-dollar valuations. If you try to run a discounted cash flow model for an AI company, I doubt very much is going to give you an answer that would be considered reliable. In a few years, once the market settles down, that may be the case. Right now, it's entirely a market-driven, news-driven, event-driven. If investors are interested in artificial intelligence at all, they mainly differentiate by who the lead investors are. If a known brand name investor, maybe Peter Thiel out in California, or if it's a known quantity in technology such as Microsoft, if those entities put money into a company, then that's a seal of approval that at least the technology is probably sound. The other way you distinguish them is you have to understand their markets. What kind of market are they going for? The distinction is going to come from investors that identify companies that are in a vertical space that is not being served and where the companies can build a moat around their competitive position, which probably means they're going to have either a proprietary machine learning algorithm, a proprietary large language model, or they're going to have proprietary access to data that is going to be used to train the machine learning algorithm. If you have one of those three things, then perhaps that company is plausible. Investing in something you don't understand is a great way to lose your money. One of the dangers of AI that I've seen over and over again is that entrepreneurs that create an AI platform, they're not going need first. Rather, they've developed an AI tool that is looking for a problem to solve or a project to complete, whether it's AI or anything else. The need should come before the invention, not the invention before the need. So AI is learning from everything right now. It's learning from statistics. It's learning from images. It's learning from text. It's learning from structured data, unstructured data. And that's what makes AI so compelling, is that in theory, anything that you put in front of an AI platform is subject to the AI platform learning it, and therefore over time becoming smarter and smarter and relying less on other platforms, other data sets to continue learning. Data quality is a massively key driver. One of the reasons that artificial intelligence platforms are known to hallucinate, meaning that they just make things up or imagine things, is because the data is bad, or at least incomplete. So if you're going to run an artificial intelligence platform, one of the things that you simply must embrace is the need for data hygiene, which means your data needs to be recent, It needs to be complete. It needs to be well organized, defined, and marked. If you don't have those things, then artificial intelligence is the most archetypal example of garbage in, garbage out. And with artificial intelligence, there's a multiplier effect because we tend to believe what artificial intelligence tells us because it's really good at making a convincing argument that it's right. The data has to be clean. Machine learning and therefore artificial intelligence will be much more effective if it's relying upon a small data set that has impeccable hygiene than a large data set or ultra large data set that has minimal data hygiene. Because most artificial intelligence platforms generally cannot distinguish viable data versus inviolable data. Rather, artificial intelligence sees a set of data in front of it, assumes it's true, and does the best to produce meaningful conclusions and synthesis for its users based on the available data. As more and more entities develop their own proprietary artificial intelligence platforms that are super niched in answering specific questions for specific audiences, the rate of deterioration of value will increase. But this is nothing new. The most common reason that an AI startup fails is because they developed the technology first and then went looking for a problem to solve. I think if you're a beginner and you want to invest in AI, invest in publicly traded companies that are heavily exposed to artificial intelligence. I don't think that investing in artificial intelligence is right for the beginning investor. If you're an investor looking to invest, or maybe you have invested in an AI company, we can help by helping you plan for the company's exit. We can help you understand the market for buying artificial intelligence companies in your sector. We can also help you with your compliance around stock option valuation. We can help you with understanding your valuation as you raise successive rounds of capital. And when you're ready to exit, we're there too. And we can help you understand what price you want to seek from potential buyers as you move towards an exit. The AI space is such a nascent space with tremendous growth, tremendous opportunity, tremendous potential. And there's a lot more we don't know about the market or even the technology than we do know about the market. That makes investing in companies like this very tricky because at some point the market will consolidate, the market will mature. And when markets do, that usually means that some companies don't make it. What we can do at High Score Strategies is help clients understand a plausible range of value based on market metrics. We can also develop a model that helps investors understand the business and understand where the key variables are so that we can stress test those variables. We can determine a credible value thesis for that company.